Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. Welcome back to the show, Rick, and Happy New Year.
Happy New Year to you too, Jim. Always a pleasure to join you.
The price of oil is higher than it usually is this time of year. Very positive move, the highest it's been since 2014. What's your feeling on it? It's now nearly $65 a barrel.
Well, that's a very timely question, Jim. I've had a target of $63.08 for the February crude contract for quite some time. And this was kind of an interlude in a bearish long-term projection. In our discussions in the past, I've mentioned prices on crude below $30 a barrel. But for quite some time in 2017, I suspended disbelief and just tried to stick with the technical picture, which was definitely pointing higher. So what happened that's very interesting to me is that crude, basis the February NYMEX contract, exceeded that 63.08 target, which, by the way, has been coming since, about February, about a year, since February of 2016. So this is a very, very long-term pattern that's played out in crude. And instead of stopping exactly at 63.08 and giving us a potentially shortable retracement, it closed slightly above that threshold yesterday, and today is streaking higher. So currently trading $64.58, 19 cents off the intraday high. So this is a very decisive penetration of that 63.08 target, which I call a hidden pivot resistance. And typically, well, I look for these hidden pivots to work, in other words, to repel the trend. But when they don't, the clear implication is that the trend is very powerful. So I think that's what we're seeing in crude right here. And I'm, at this point, sort of focused on prices above $70 a barrel.
Is this because the Russians and OPEC have actually stuck to their production limit freeze?
No, in the past when we've discussed that, I guess you could say that I've been skeptical. I've always felt that the supply side bull market story was a fraud. That bull markets don't happen because there's a curtailment of supply. I think that real bull markets happen because of an increase in demand. So my feeling is that initially crude had that look. It certainly threw me off the scent by going up mainly, or at least seemingly driven by this supply side story where every supplier from Venezuela to Iran to Russia was rumored to be throttling back, and this was pushing prices up. But what's happened is perhaps a real segue into a genuine bull market that is driven by demand that is not quite apparent right now. I would expect that before a full-blown bull market can happen in crude and certain other commodities, that we would need to see the biggest buyer at the margin, namely China, active in those markets. So you might look at this run-up in crude as forecasting a manufacturing resurgence in China and in perhaps other redoubts of the world.
Is one of the reasons that oil consumption is going up is the Chinese are buying cars and trucks at a tremendous rate?
Well, that seems like a pretty plausible story. I don't have my finger on Chinese auto sales statistics or anything like that, but usually we see somewhat after the fact that the Chinese economy has started to perk up. A lot of the information doesn't seem very timely, and there's certainly some really conflicting information that we get from, the most bearish sources on China would probably be Jim Rickards, who says China's gotten way ahead of itself in certain areas of investment or malinvestment. And Harry Dent is another guy out there who's somewhat skeptical of the global resurgence based on a Chinese boom.
Well, of course, we found out that the Chinese Bureau of Statistics had been bought off by some people because it helped them manipulate the stock market. So, and of course, with the government controlling everything, their numbers out of China are always suspect. But if you look at the traffic jams in Beijing and other major cities, it's no doubt that the bicycle that dominated their streets 10 years ago has definitely been replaced by the car.
Yeah, it's pretty crowded. I haven't been to Shanghai or Beijing, but I can't imagine driving there. But it's, the anecdotal evidence from people that have been to China and see in Shanghai just building cranes as far as the eye can see. Well, the boom has just sort of kept on going there. Sometimes at a lower threshold that makes us think, well, maybe the economy is incipiently recessionary, but that doesn't seem to be the case. The worst it does is maybe slow down to 4%, and then for a little while, and then we're off to the races again.
Also, China has banned the sale of the 10 models that pollute the most because they're trying to encourage people to buy low pollution or electric cars.
Yeah, it's gotten so serious, I think, that even the asthmatic leadership of China, or at least those of the leaders who are asthmatic, are realizing just how bad the air is. And, ultimately we're all environmentalists when we fear for our lives and the lives and health of our children. So that's maybe what's happened in China. The pollution got so bad that they're not taking the usual corrupt course to cover it, just kind of paper it over and pretend they're doing something. They actually are doing something.
Yet, I don't see China doing much to prevent or reduce smoking. During the Beijing Olympics, they advised their athletes that maybe they would like to cut back.
Right. I think they're not quite where we are as far as warning labels on tobacco products and things like that.
Well, my cynical attitude towards China and Japan, especially where the government has the tobacco monopoly, they want you to smoke so that you die at 65 and don't collect your old age pension.
Well, that's definitely one variation on the depopulation that they attempted, and the Chinese have always used agents of central government to promote birth rates and death rates. And an increase in smoking, of course, has its downside because unless you choose to ignore people who are developing lung cancers, it winds up being a very inhumane way to keep the population down.
Well, anyway, I don't know if that's the official government policy, but I'm just thinking about how cynical I am and how cynical a lot of governments are.
Well, the Chinese have a level of corruption that it's sort of like comparing New Jersey to Louisiana. I grew up in New Jersey where things were pretty corrupt there, but Louisiana, there were pros. And when we talk about, let's say, the corruption in India, the Indians can only just kind of shake their heads in awe of what goes on in China.
We'll have more with Rick Ackerman right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Welcome back. We're speaking with Rick Ackerman. Rick, what's your outlook on interest rates?
Well, just as we were discussing the interesting thing that happened in crude yesterday and today, we've got something very interesting going on in the bond world. I've been tracking the 10-year note rate, and some time ago I put out an advisory that said that if the 10-year rate should go above 2.57%, that we're looking at a potential blast off in the 10-year rate. And we haven't, the 10-year note has not gone far enough above 2.57 yet for me to say that the target, the eventual target associated with that number is going to be reached. But let's just say if the 10-year noodles around 2.57% for another couple days, or perhaps closes above it for 2 days, then I think we're going to have a green light for rates as high as 3.11% on the 10-year. And given the fact that the U.S. economy is entirely dependent on very easy credit, that there's definitely going to be an impact. There'll be considerable weight on economic growth if the 10-year is headed to that 3.11 number.
There are strong hints in both Canada and the U.S. that we're going to see an official interest rate hike within a few days or at least a few weeks.
Well, it's nice to see these brave souls at the central banks being 2 steps behind what the markets are already doing. So they can talk about tightening, but the markets are clearly making the adjustment for them. So whereas we, for a time there, all the discussions we had, I would have said that an increase in administered rates was about as likely as a Martian invasion. Something different has actually evolved, and that is that the market is doing a better job walking the Fed's walk than the Fed is doing for itself.
Is inflation back? According to the Wall Street Journal, it is.
There again, I would have to give you, I agree with qualifications. I've been a hardcore deflationist for the last 35 years, and I would say we're having maybe a dead cat bounce in inflation. And it remains to be seen whether it eventually trickles into wages. We've had stagnating real wages more or less forever, and we've got many deflationary things kind of holding inflation at bay. But we're certainly, because of all the monetization that's taken place around the world, we're certainly at a threshold where we will have inflation in some, well, you could see financial assets for one, and maybe real estate. But against that, you have to set the, let's call it the unactualized juggernaut of deflation. However much inflation we have now, eventually it's going to run into this unactualized deflation juggernaut that is, one way to describe it is just to look at the quadrillion-dollar derivatives bubble. All of that is a potential deleveraging, And when you talk about a deleveraging of a quadrillion-dollar market, then the central banks wind up being pretty puny as far as what they can throw against that in the way of monetization.
We'll have more with Rick Ackerman right after this.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Rick Ackerman. Rick, what's your outlook on the U.S. dollar?
Well, there again, I've been very, very bullish on the dollar for some time, and it's been coming down since the first of the year, first of 2017 anyway, and we had what may have been a dead cat bounce this autumn in the dollar index from a low of around 91 to a high in late October of 95 and change. So back just below 92 as I speak, and I've got a crucial number there at 91.57. That's basis the dollar index, and we're currently just above that at 91.89, and if that support doesn't hold, it would be a pretty bearish sign for the dollar. So if we're not rallying here, then it's probably the dollar's last chance to get traction before it sinks into the 80s. I do think that the long-term, very long-term, the bull market for the dollar is intact. And if you go to, let's say, the monthly chart, you can see that the dollar's, the slide since January of 2017 down to the recent low is really just corrective. But this corrections may still have a ways to go before it runs its course.
You're looking at Boeing stock now as almost a barometer of how the stock market is doing?
Yeah, I think Boeing is an excellent indicator because it's definitely brick and mortars. They make a real product. They sell it globally. It's in the durable goods category. It's one of the big ticket items, or maybe the biggest ticket item, other than skyscrapers. And Boeing has actually outperformed the FAANG stocks. The trajectory is so steep that you look at it and you think, well, this is definitely a bubble. I was using a 301.96 target. That's called $302 for Boeing for months. And last week, when it just kind of blew through that, I thought, uh-oh, it's doing something that I don't even have a target for Boeing, or at least I can't extrapolate a long-term target. I'm using kind of an extension of a piece of the chart. So my current target is 346.24, but given the force with which the stock has blown through that 302 target, I think there's enough energy here to get it to 400. And if there's going to be any surprise, it's as far as I'm concerned, it's how quickly the stock is going to get to 400. And one other thing, John Hussman was out with a very interesting piece last week on bubbles. Are we in a bubble? How would we know we're in a bubble? How does this bubble compare with bubbles of the past? And he takes kind of a soft approach, meaning he gets away from statistics and empirical evidence and just kind of goes into what he calls a touchy-feely analysis of bubble. And by his reckoning, we maybe have we're kind of on the early ramp-up stage of a bubble, and we only got to there within the last few months. But he says that in order for some of the things that he charts to get into bubble-like trajectories, it could be another 12 to 18 months before we see that. However, looking at the stock of Boeing, the rally is so steep that I can't, I don't know how it can possibly keep this up for another 2 months, or let alone 12 to 18 months. So Boeing winds up being a very important bellwether as far as I'm concerned, because it is the kind of the best of category here in real world possibilities. If we're about to see a global economic resurgence.
Well, around the planet, wages are expected to go up, especially in Asia, maybe not so much here. But even Walmart, who you know is very tight with the dollar, they plan to boost their minimum wage for U.S. employees to $11 an hour. Now, you hope they don't take the same attitude that Tim Hortons has in Ontario, where they boosted minimum wages to $14 an hour, a big hike in terms of incremental increase. I have a problem with English today. Tim Hortons said, sure, you can up their minimum wage, but we're taking away their paid breaks and their benefits. So in the long run, the employees there aren't any better off.
Interesting. Even though he says that, it's really hard for me to imagine that prices are not going to go up in restaurants. I don't know. It's maybe the irresistible object meets the immovable object.
Well, the franchisees in Ontario were very upset because Tim Hortons' head office won't let them increase prices to meet the higher minimum wage.
Yeah, and that's trouble. In San Francisco, you can see the net result when city government decides they want all waiters to be making $15 an hour. Well, the effect has been that a huge number of restaurants have closed in San Francisco. So I'm definitely not one for monkeying around with the minimum wage, but in this case, whether or not arbitrarily declaring a minimum wage, a higher minimum wage is going to produce inflation, well, the jury's still out, simply because you have so many deflationary pressures in certain minimum wage businesses, such as the grocery business and restaurants. The margins are already so tight that the employers are really at that threshold of affordability. So they really can't pass too much of a price increase on to customers, because we customers have so many alternatives.
Well, also, Vancouver's hit the point where several restaurants have either had to cut back hours or close because they can't find cooks at the wages they're prepared to pay them. And I think one of the problems is the high cost of living in Vancouver, where, outrageous prices for even bachelor apartments.
Well, that's a problem that most large cities have now. We've had such a huge real estate inflation in L.A., Boston, New York, San Francisco. I read a story about my old town, Denver. Denver got hugely overbuilt on condos, and now the city's coming in with this idea about subsidizing condos so that ordinary working people could live in what are essentially high-end dwellings. So it would amount to about $600 for an individual and $900 for a family. And you've got the pros and cons out there in the form of the Milton Friedman types, of which I am one, would say you don't want to screw around with subsidies, but because you're really just subsidizing high-end apartments, that they should find their own natural price. But the city's response is, well, yes, we believe that the market would eventually adjust the prices down for this glut of high-end living space, but that would take 2 or 3 years, and we really don't have that time. We've got to find housing for people who are vital to city services, and not just government services, but for your restaurant workers and just people who are at the working man's end of the salary scale.
Well, in the suburb of Burnaby, just next to Vancouver, they found a solution to high condo prices. Somebody opened up a high-end brothel in a high-rise. So,
Well, that's not a surprise. You know, we do know the what they're dealing with. That is, after all, the oldest profession, and there's certainly always supply out there to meet demand that will never die.
Yeah, well, my dad once said, never open a multi-story brothel because there's too much effing overhead.
Well, I'm thinking about that, and I can't recall any multi-story brothels. Usually they're one-story massage parlors where I'm from. But I think he's on the right track there, economically speaking.
Rick, always fun talking with you.
Likewise, Jim. Thanks for inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.